Bitcoin could crash further, says JP Morgan. Yes, we're looking to test that $26,000 mark to signal a retail capitulation point. With that in mind, let's take a look at the Bitcoin graph. Still swimming sideways at the moment, nothing too crazy on the 4-hour chart either. It's just people are getting a bit bored. But you know what? This is literally a span of just a few days. So I think people just gotta take a breather at this moment and just gotta keep an eye on the market and what's gonna happen in the near future. I think the test around that $26,000 mark could be possible, although the capitulation point might actually come early for investors if the price does hit that $30,000 mark, therefore not even allowing us to go down to that $27,000 mark. But let's keep an eye on the market and see what happens. And when these prices do occur, then what are you going to do? That's right, you're going to average in. So this is the time around the world right now. Hour is exactly on the dot, which is nice. This is what's happened around the market. The market cap has decreased a little bit, so pretty boring sort of day. Since yesterday and today, nothing much has changed, although Dogecoin has gone up 11%, which is worth noting. I'm not a huge fan of Dogecoin, but I do have some Dogecoin news today for those of you who are really into Dogecoin. So starting today, inbound transfers for Doge are now available, and it's now going to be trading on Coinbase Pro. That's sort of making headlines today. Further news on Coinbase, they're adding Apple Pay to crypto debit card. The tie-up of Coinbase and Apple Pay could help spur broader use of crypto debit cards. Coinbase will begin rolling this service to the United States first starting this week. Apple Pay means users will not need a physical debit card, which is nice. And Coinbase card reward means that there can be economic value to using the service, like your cashback offers and things like that. So really excited to see how the cards on Coinbase will then allow Coinbase to perform even better into the future. Biggest news of the day is obviously Ethereum. Want to talk more about that, especially the EIP 1559 upgrade. So Ethereum co-founder reveals that this is slightly old article, but it does help you understand what EIP 1559 is all about. And it's obviously something that could be used to flip that dominance, that flippening, so that Bitcoin will take the second place seat and then Ethereum will be the first in terms of market cap dominance. A proposed upgrade to the Ethereum blockchain that would destroy or burn Ether tokens could mean Ethereum becomes more sound than Bitcoin, according to Ethereum co-founder Vitalik Buterin. So yeah, it's looking pretty good. The Ethereum's upgrade, known as EIP 1559, guys, this bit's really important and part of the broader move towards Ethereum 2.0, we'll see that the network's current transaction fee system overhauled, with users sending a fee to the network itself instead of the so-called miners that maintain the network. These fees will then be burned, reducing the overall supply, something that is itself a controversial topic among the cryptocurrency community. So people think that if the supply is going to drop, the simple principle of economics will drive the price up. Not necessarily. That is one of the side benefits of the supply decreasing in this situation, but what this is going to do is reduce congestion, therefore making Ethereum a lot more scalable, and this is going to happen in about 45 days time. But there is some developments on this, which I'm going to cover just in a minute. Now, furthermore, with many of the biggest DeFi projects built on top of Ethereum's blockchain, the token has soared as users flood the network. So there's a lot of congestion happening in Ethereum right now, which can be a barrier to the expansion of the adoption of Ethereum network. Meanwhile, the latest cryptocurrency craze for so-called NFTs has also resulted in heavy traffic in the underlying Ethereum network. And yeah, that's probably true in many degrees. But since then, we've had, Polygon, we've had Arbitrum, we've had Uniswap. There are efforts of scaling that is being put in place for Ethereum scalability. But this EIP 1559 is going to be again revolutionary, making that Ethereum even more scalable, even more adoptable to the general public. And so because a portion of the gas fees are now being attributed to the network itself by burning it, that means the miners will get a less compensation for their mining. So of course, we're going to see some opposition from the miner groups. Now, there is a loophole that was discovered in Ethereum in the EIP 1559. And so this is just an update on how that development is going. So Ethereum developer Martin H. Swindy, I can't pronounce that name, identified and suggested a fix for a loophole in EIP 1559, a major upgrade scheduled for mid-July. The loophole, if left unfixed, would have allowed for fake large transactions that could overwhelm the network. So I'm glad he was able to discover this. So scheduled for mid-July, EIP 1559 burns some Ethereum spent on processing transactions like we've discovered just before. Instead of giving it all to the miners, the proposal aims to reduce the volatility of Ethereum's transaction fee by burning a little bit of that gas fee. Under EIP 1559, users can tip, however, the miners and the Ethereum network to speed up the transaction. To do this, they specify a maximum amount they're willing to pay. But the problem is this maximum amount, there was no limit on how much maximum amount that they could pay was. So an attack attacker or a hacker could then insert a crazy amount into this maximum gas fee, and that could really clog up the market. So this loophole has now been discovered. They're adding a few extra lines of code, and it's no more issues anymore, which is good. So looks like we're on track for that EIP 1559 upgrade for mid-July. If you haven't done so and you want to stay updated, please subscribe to this channel, and that way you can get the latest information on the EIP 1559 upgrade for Ethereum network. Overall, EIP 1559 is a very, very bullish move for Ethereum because it is an upgrade. It is going to be better for scalability. Brief news on Theta. For those of you who hold Theta, it looks like Theta network is on track to launch mainnet v3, T-Fuel staking on June 30th as well. And so yeah, we're seeing that backed up by their own announcements as well. So we're on track for Theta. If you're holding it, this is a positive news, and this is news that is on track with what they have announced as well. So let's keep an eye on Theta. I am bullish on Theta, and I think it will do really well, especially with the altcoin season that is arguably here or is going to even be more of in the near future. Now, I wanted to have a quick chat about Mina. A lot of people are losing their poo-poo because they are seeing Mina prices crash. We are going to need a bit of time for Mina prices to actually negotiate itself and to stabilize. Okay, it's only the first 24 hours at the moment. It's only a very, very recent launch. My suggestion is just relax and just be cool. And it's going to be one of those altcoins that's going to benefit from a long-term hold, I think. So let's have a look at Kraken. They're of course beginning to support Mina protocol to be trading on June 1st, 2021. And so what is Mina protocol? It was developed back in 2017. It supports the first ever compressed blockchain or distributed ledger technology platform, which means that the entire blockchain is roughly 22 kilobytes in size, which, as you know, is extremely small, and it's just the size of a few tweets. Mina thus offers a low barrier to entry to those who wish to operate a node and validate transactions, and this would have an element of mining in there as well. As explained by the Kraken team, Mina's blockchain has been developed to maintain its size regardless of the amount of people accessing it or its years of transaction history, using a technology called zero-knowledge proofs. So it does have a pretty extensive use case, and there has been a massive push for Mina to grow. So I think overall the uptake and the technology, I think, does line up for definitely a small portion of your portfolio to actually take up Mina. If this is the first time you've heard about Mina, I think the price action right now isn't so bad either, since that it's dipped down. So there's probably better gains if you actually enter into it now rather than entering into it from the very, very beginning of its launch. Of course, there are people who have strong held this Mina protocol before its launch as well, who I congratulate them for their good gains on their first launch price. Really interesting news. Pointless but incredible, but I think it's more incredible than pointless. New electric car mines crypto while it's parked. Canadian light vehicle manufacturer Daymac has announced an electric car that can mine Bitcoin and other cryptocurrencies while it's parked. Well, there's something for electric usage. So one of the pressing factors of mining was that electrical use was too high and it ate into the profits of the regular miners. So they're thinking about manufacturing this vehicle that's going to be able to mine Bitcoin, Ethereum, and Doge whilst the car is parked or is being charged. It's going to be called the Spiritus, and there is really not much detail on the hardware specifics of what the car is going to be coming with, so as to calculate the viability and the profitability of this cryptocurrency mining through your car. So there are going to be a few different variations under the Spiritus model, the deluxe model, and the ultimate model. You know what, looking at the price difference, there's a huge price difference. It looks freaking awesome though. So I'm hoping that this could become a norm, and if it can be viable, then yeah, it's great. It's going to be a great hedge against the depreciation of your vehicles. And I saw something like that earlier when this crypto nut and a car enthusiast, Simon Byrne, he built a portable mining rig into his BMW i8 hybrid vehicle, and he was making 122,000 profit per year, which is freaking crazy. Now, more on Ethereum. Institutional investors are now currently loading up on Ethereum, and its share of the AUM, which is assets under management, hitting a new record. So institutional investors, they go and manage a bunch of other people's money. So let's say I'm an institution and I manage like 10 different people's money, and they're all really rich people. Each of them give me $1 million to manage. Then that means the assets under management of my company, my institution, is of $10 million. Now, the share of that AUM is hitting a record. This is what this article here means. So institutional investors continue to exit Bitcoin in favor of Ethereum, with Ether investment products now representing more than 1/4 of institutional crypto AUM. So this is obviously not taking into account the general institutional investors. This is more crypto institutional investors that we're talking about. They're moving away from Bitcoin into Ethereum because they see more prospects for Ethereum. Institutional demand for Ethereum continues to surge, with Ether products now representing more than 1/4 of the assets under management of crypto investment products. Significant institutional inflows of 74 million as investors sought to capitalize on the fallout of the recent crash. More than 63% of institutional inflows were injected into Ether products, or 46.8 million of the total. Ether products now represent 27% of the combined AUM for crypto investment products, the highest share yet. Significant inflows were also made to products offering exposure to multiple crypto assets, 11.1 million, as well as funds targeting Cardano, 5.2 million, XRP, 4.5 million, and Polkadot, 3.8 million. So we can see that people are now more aggressive institutional investors. The ones that know about crypto a bit more, specialized into cryptocurrencies, they are moving at their risk curve out into Ethereum and other altcoins, as we can see. So Ethereum is currently the second most traded crypto asset, 38.8 billion in daily volume, ranking behind Tether, which is not Bitcoin, which is a stable coin, on 103 billion, which is what we expect because people convert into that Tether a lot to actually do their crypto swap transactions. Roughly 32.9 billion of Bitcoin changes hand over the last 24 hours. So in terms of the daily volume, Ethereum is actually beating Bitcoin at the moment. So the flippening is actually a more and more realistic picture than ever. So this is the flippening watch, and we can sort of keep an eye on the market share and what is happening in terms of the correlation between Bitcoin and Ethereum. And it's something that I genuinely see happening within the year or so. All right, lastly is Chainlink. I was just really surprised to see the Chainlink ecosystem and the number of partnerships that it had. You can actually go ahead and group them apart into the different types of partnerships that they had with different companies. But there are more than 567 partnerships with some of the notable ones that I can see here, including Polkadot Network, Icon, we've got Quant Network, we've got Binance. So these are really, really good beefy networks. Zilliqa, I'm seeing Google, of course, Ocean Protocol, Harmony. And so look, Chainlink is looking stronger than ever. It's going to be one of the biggest data-focused cryptocurrency, kind of like the Google of the crypto and blockchain world. And I'm really excited for it. Whilst people might not really understand what Chainlink does, I think this is basically the future of cryptocurrency. And I really suggest you do some research behind Chainlink. Thanks so much for tuning in today, guys. That's been my video today. If you haven't done so, make sure you click like, subscribe, and ring the notification bell. And I will see you in the next video. Peace out.